By the end of this video, you will learn about 4 different stocks that you need to seriously consider adding to your portfolio beginning in February. How's it going, world? Michael EJ here, helping you reach your financial goals and dreams by becoming the best investor you can be. If you're new to the channel, how's it going? Mainly talking about different stock market tips and tricks that differentiate yourself from the market. I truly believe if you want to beat the market, you must think differently than the market. So if you want to think differently, stay tuned on this channel, subscribe, and let's get started. So, lately in the markets, a lot of money has been flowing into the financial sector. I think that has to do with the Fed and interest rates. I also think it has to do with where we are in the economic cycle. Usually this time, investors start paying more attention to financials because interest rates are going to rise. But I'm not going to just pitch typical banks to you. Most of my picks are different plays off of the financial sector. Starting with HLI, Houlihan Lokey. It's actually a smaller investment bank, middle market, mainly do deals in mainly deals that are below $1 billion. Now, for those that don't truly understand how investment banking kind of works, there's different levels. You got the small boutiques, you have the middle tier, and you have the large ones, the well-known ones, like your JP Morgans, your Goldman Sachs of the world, Morgan Stanley. They mainly deal with the transactions that are about $1 billion and above. And those transactions don't happen that often, maybe a couple hundred every year on average. With the boutique banks, boutique investment banks, they usually have to specialize. They have less resources. They maybe focus on 1 or 2 cities, and that limits their opportunities. The middle tier is where you can have lots of opportunities, lots of deals that can happen, because a lot of deals happen between that $50 million to $1 billion space. That's like prime real estate. Deals constantly happen. They happen over the past 2 years. At least 8,000 deals have happened in that kind of opening, about $100 million to $1 billion. So they are operating in a space where they have lots of opportunities. I did a video a while back, and I'll put it in the card, basically explaining that, look, to be successful, you need to have a lot of opportunities to be successful. People forget about that. You need lots of opportunities to show your skill. And Houlihan Lokey, what makes them different than their competitors, because they do have some. They have a few, in that they pump out the most deals. They pump out deals in a very efficient manner, as well as they do some different things. Like, for example, dealing with distressed companies that are near bankruptcy, and fairness opinions, offering an opinion on a valuation of a company that a deal was done on. High risk, high reward. So they kind of differentiate themselves there and have lots of opportunities. Also, a lot of institutional support, a lot of money going into the stock, essentially since it IPO'd in 2015. Just constantly more going in than coming out. And that's what's led to the run up in stock price. But even with that, I still think there's plenty of room to go. I mean, I have high expectations for Houlihan Lokey. I see anywhere from 60 to 90% upside in the next year or two. And it could be more than that. It could absolutely be more than that. I mean, this is a very misunderstood company. Misunderstood mainly because they focus more on efficiency, which a lot of people don't really recognize. A lot of people just think about how high your margins are. No, you can be a great company and have high return on invested capital by being the most efficient you can be. I mean, that's essentially what it's all about. That's what Houlihan Lokey focuses on, and it's why I like it as a stock and as a company in general. Next on the list, MSCI. And that's the name of the company, MSCI. They are actually indice providers. It's similar to what you see with the S&P 500. That's controlled by a company. Similar to NASDAQ, that's controlled by actually NASDAQ, the company. I mean, they pretty much do the same thing, except they do it at the broadest scale possible around the world. They have different indices for different countries, different investment styles. They customize things for different asset management and institutional investors. They do a little bit of everything across the world, across the gamut. which is why I don't see them actually having any true competition. I mean, they have somebody here in the US that go against, they got somebody that go against in London, somebody else that got to go against in Australia, but not all, those same companies don't do it all across the world like MSCI does. And that gives them a great competitive advantage in that they are able to essentially come up with indices that touch all different parts of the world. They have an international index. They have an emerging market index. They have a global index. They have different index, maybe Asia x China or Asia x Japan. They do it all. So to me, they don't really have any true competition, and they also offer analytics on top of that to beat. I mean, they're almost untouchable in that way. What's also interesting to me is that they have low business risk. For those who aren't in the asset management space, you're benchmarked to everything. You're always benchmarked. Your returns and your risk profile of your portfolio will always be compared to a benchmark. There's no such thing as just absolute returns anymore. You are always going to be compared to a benchmark. And since MSCI is focused on creating unique benchmarks that are customizable to specific clients, that just furthers them. That takes them to the next level. And it's a subscription-based model. I mean, you have to pay them no matter what. So, hey, they're collecting cash and you might not even know about it. So, look, this company has a lot going for itself. I understand why a lot of institutional support behind it. I understand why the company was run up. Now, I don't see a lot of great upside there. I see somewhere in the neighborhood of 20 to 40%, but I see that happening in the next couple of months, maybe up to a year, but I'm hoping it happens in the next 6 to 9 months as more money goes into the financial sector and more people focus on the financial sector. This is a unique way to play off of it, and a company I think that has great competitive advantages. Next on the list is a service I'm pretty sure you've used in the past, or today even, and that's PayPal, PYPL. I mean, what is it, about a $96 billion market cap now? Company's huge, definitely making things happen. Since they spun out of eBay in 2015, they just been on a tear in the stock market. And hey, they're just simply an online payment provider. What makes them more unique is kind of the focus on international payments, foreign exchange, withdrawal from foreign accounts. That's where they really make their money, and that's where their focus is at. Now, I mentioned this in my stock picks for 2018 in that I'm really looking for companies that are focused on international growth. You might not know this, but there's a lot more growth and a lot more opportunities outside of the United States. And for companies to focus more on it, that to me is a green light. To me, that is absolutely phenomenal, and that's what PayPal is focused on. Now, I've also mentioned that, hey, PayPal is kind of low risk. I mean, they're the leader in this online payment industry. They don't have any debt, have a decent return on invested capital, and to me, no true competition that does it at a wide scale like PayPal does. I mean, you can consider maybe just the credit card providers, but PayPal does it in a different way, especially when you consider that foreign exchange, foreign account aspect to them. So to me, PayPal will be a great investment. Now, I must admit, they're slightly overvalued. PayPal is just a tad. You know, they're rich. It's a rich valuation and it's justified. It's there for a reason. So I actually don't see that much upside, 20 to 30% in the next year, similar to MSCI. But also similar to MSCI is that I'm comfortable with that. I'm comfortable knowing that this is probably the return I'm going to get. I'm going to get it in a shorter time frame, and the probability is higher. The numbers are in my favor. So definitely look at PayPal as an investment. Now for my last pick, I'm going to venture away from financials and actually talk about a healthcare name that gets me really excited. The ticker is ABC and the company is AmerisourceBergen Corp. It's a weird name. I'm just going to say it outright. It's a weird name, but they are essentially a big pharma middleman, a pharmaceutical middleman. They distribute different pharmaceuticals and other healthcare needs to the different doctors and all the mainly Walgreens and this source. They distribute all of that. They actually take the drugs mainly from the big pharma companies. They put it in their network of over 24 different distribution stations, and then they just distribute it out. I mean, to Walgreens and the sorts. I mean, it's pretty unique business. I mean, they're just kind of a middleman in it all. You know, similar to how I explained on how the stock market works. You know, Ralph Lauren is the real provider. Macy's kind of is the distributor in this. And instead of the end client being you or I, it's like Walgreens and CVS. Those are the end clients. Now, they do have a little bit of competition. They're the only company that's really focused just on that. But you have McKesson and Cardinal Health, larger names, much bigger companies that have, you know, a segment there, but not as focused as ABC. What gets me so excited for this company is that there's a lot of intangibles on the production side. I truly believe that to really drive up your return on invested capital, you need lots of intangible assets. And where the market always gets it wrong, overlooked always, is on the production side of things, how well a company could do. And they have lots of intellectual property, patents, proprietary technology, network effects, having all those different facilities strategically located across the country. That all matters. And their turnover is phenomenal. They can easily grab something from Big Pharma and get it out to Walgreens relatively quickly. And because they can do that, their turnover is amazing. Because their turnover is amazing, even with margins that are 1% to 2%, they're able to churn out sales like no other. Able to churn it out like no other. So that's the main driver behind their valuation and behind their numbers and the cash that they are able to produce. Because they do produce some cash. Even with little slim margins, they're producing a lot of cash. And there's a lot of institutional support there. It's been there for a while. And similar to Houlihan Lokey, I have really high expectations. I mean, I'm talking 70 to 100% upside. I think this stock can double in the next year or two. And it's because the market this is just something the market always overlooks. They pay attention to margins, never pay attention to turnover. So this is a sneaky company. You might have to hold on for a while. The market will eventually recognize it. Once they really start pumping out cash like they've been doing, I think they can continue to do it. Once the market truly pays attention, then the stock can just rise up even more. And those are the 4 picks I have for you today. I am a big believer that in order to really get the returns, you need to follow the money. So a lot of money is going towards financials right now. So go ahead and follow it. Look at some financial names that might interest you. And of course, you always need to diversify your portfolio. You can't put it all in financials or what I was talking about for my stock picks for 2018. You can't put it all into technology. Offer a healthcare name, something that's a little bit more defensive, something that can kind of fight off just in case the market turns, but still looking at a great company. Always looking for great companies with good institutional support. Michael EJ here, helping you reach your financial goals and dreams by becoming the best investor you can be. And I'll see you in the next video. Peace.